Hello again and welcome back. Thanks for tuning in. Thanks for watching on this Tariff Tuesday. Maybe it's Taco Tuesday or maybe it's Carnival where you're from. I know it is in my house. We are celebrating that today. My wife is from the Caribbean. But either way, these tariffs cannot be good for the housing market. So I have a few charts to look at first to kind of put things into perspective, and then we'll see what the internet has to say about things. Okay, so starting with this first chart here, this is all the interest paid by all Canadians on residential mortgages in Canada for Q3 2024, but it is seasonally adjusted for the whole year. So this is a yearly amount, right? Or as of Q3 2024, it was $104 billion that Canadians paid just in interest. And I believe these are to the big banks or to the major banks. I don't know if they include, of course, they're probably not including small private lenders and stuff like that, but these are for anyone that would be included with the CMHC data and the StatsCan data here. So don't quote me on exactly who it is, but again, a lot of the major players in here. So yeah, look at this chart here. Look at 2022, of course, when interest rates started rising, it shot right up, right? So we are paying a lot more. We're paying 108% more per year than we were paying in 2022. Now look at all the years before that, back to 2005. I brought the data back to 2005 because that's when we have the house price data, even though I'm not showing that today. But back to 2005, it went up a little bit or a lot, I guess you could say, in billions of dollars, but it didn't jump. Look at the jump we've had now compared to the last, 15 or 17 years prior to then. From 2005 to 2022, 17 years, it increased 72%. So we're paying 72% more interest on our mortgages. Of course, our population did increase by 72%. It went up maybe 5 million or 10 million in that time. I think it was more like closer to 5. And it was $21 billion, the increase in that 17 years. And just at the bottom of the screen there, for reference, during 2007, so right before the financial crisis, we were paying $40 billion a year in mortgage interest. And if you bring that to 2022, Q1 2022 is that big vertical line there, dotted line, we were paying $50 billion. So that increased 25% or $10 billion in 14 and a half years. Again, inflation, house prices go up, people make more money. Of course, it's going to increase. But look at just at 2.5 years on the right-hand side there. 2.5 years, it went up 108% more than the 17 years prior in just 2.5 years, and it increased $54 billion per year. Now, again, if you add in all the private mortgages and private lending and all these other things, I don't even know if the credit unions are involved in this or included in this data, but it has increased dramatically in that same time frame. So it's just out of this world when you look at this chart. The mortgage, and it's taking money out of your pocket, and it will ultimately slow the economy, less for businesses, less investment, and all the rest of that. Now let's put this into perspective here. These are billions of dollars here. So personal income tax, and this was for 2023, but it obviously went up a little bit in 2024, but 2023 except for the mortgage interest, which I just showed you. But yeah, 2023, $208 billion Canadians paid in personal income tax. Then mortgage interest, $104 billion, which is pretty high. Again, I showed you the historical chart there. Then you have corporate income tax, $94 billion. So we're actually paying less corporate income tax in Canada than we are on residential mortgages. And there's the federal GST, and that's just the federal part. In Ontario, we have an extra 8% provincially. But just the federal portion of the HST, Canadians paid $46 billion. And I know a lot of people get rebates and whatnot, but not everybody does. And then here you have the tariffs. So, of course, everyone's talking about tariffs. Look at the tariffs. Tariffs, 25% tariffs on $155 billion of goods over the course of a year would be $39 billion. So less than the GST. It's still a lot of money, and it's more money out of your pocket. But when people are talking about how that's going to hurt the economy, of course anything is going to hurt the economy at this point. But it's less than half of the interest we pay on mortgages, less than we pay in HST or in GST, I should say, and a lot less than we pay in income tax. So of course it is just another nail in the coffin at this point. But I wanted to put that into perspective. So this week I'm planning to keep this video just a little shorter than the rest of them. They've been kind of dragging on a little bit, but I'm going to get into the news from X. Any of the stats from across Canada, I'm not going to show until next week because it's only, the 4th of March right now, and a lot of places haven't reported, so it's just going to be annoying when I have like half the places and I have to do it again next week. So next week I will go right across Canada. I know that I've heard from Alberta already, and their sales are down and their new listings are up, so things seem to be changing there. But again, we're going to get into that next week. So first, let's start off with what the Home Builders Association has to say about the tariffs. And again, the tariffs are not from the U.S., are part of them. The tariffs are from our government, so they're taxing the goods that we're getting more. So it's the government's deciding to tax us to punish the U.S. because the government in the U.S. is taxing our goods to punish us. So anyway, it's kind of like we're going to tax our citizens, we're going to tax our citizens, and that's going to just make everything more expensive for everyone. But listen to this from the Home Builders Association. This is from Melissa. Boom, Home Builders Association just said that Canada's own counter tariffs will have a greater negative impact on Canada, yet the Liberals and Team Canada still think this is best. So regardless who, I don't like to point out Liberals or Team Canada, but let's see what this guy has to say.
U.S. tariffs of 25% on Canada will be problematic. They, in and of themselves, will have muted effect on construction costs here in Canada. What will affect our market more will be our own counter tariffs and, most importantly, the impact the U.S. tariffs will have on our overall economy, which in turn will affect housing starts.
So there you go. That's what the Home Builders Association had to say. I think that's the Canadian Home Builders Association, but he's got all the provinces' flags behind there, so it makes sense. And short and sweet from Ben Rabideau, would be nice to have a functioning government right about now. I agree. Regardless of what team you're on or what political spectrum you prefer, we do need a functioning government at times like this. Everybody's talking about tariffs. Steve Saretsky, with tariffs looming, I heard from one of the largest builders in the city they have already canceled all American appliance orders and swapped it for LG Samsung, the first of many moves. All right, so they're switching to the Korean, I think that is, LG, maybe made in China. But there's going to be a lot of that. If it sticks around, of course, we'll just get some Chinese and Korean and Asian stuff in Canada, which we already get a lot of anyway. But now my friend is an appliance repair guy, and he says stick to Frigidaire and Electrolux and stuff like that because I think maybe they're made in North America, but they're a lot easier to get parts, a lot cheaper to get parts, and a lot easier to fix, and they all break. So keep that in mind when you're buying your LG and Samsung appliances. They're very costly to fix and hard to get parts for, supposedly. This was kind of funny here from Market Mania, and I wouldn't doubt it. I'd like to know what position the landlord's in before I rented a house these days. It's 2025, and instead of landlords asking tenants for proof of income, tenants are asking landlords for proof of income. Yeah, wow, that's. I'd like to know proof of down payment and what position they are. If I was renting a house personally, I'd want to know what they paid for it, when they bought it, and kind of what position they're in. But great point there. And the rental market seems to be getting even more desperate here from Shazzy. Landlords are begging for tenants with 3 months free rent. It used to be 2 months. How bad is the market getting? A month ago, I found 2 months free plus cash in hand as move-in specials. Now this article is showing 3 months free rent. Things are getting worse. Let's break it down. And there you have it. The month's gifts lure tenants as market shifts in Ontario. And they're giving 3 months. And again, this is not just a one-time thing. The tenant could move out, and next year someone could be offering 3 months again. So they're just going to keep moving, thereby driving down the rents. So you're going to see these rents at, say, $2,000 a month. But when you're getting 2-3 months rent-free, that's technically not $2,000 a month. So now these rent reports that come out on rentals.ca could be inaccurate because especially there's Toronto were doing it, Alberta was doing it. So there's a lot of that. They just track the actual rent asking prices. So it'll be interesting to see going forward. People would be dropping rents like they already are doing, but they're also giving free months. So it's again, there's a calculation that needs to be made in there. Here's from Ron Butler. He seems to be pretty bearish on the market lately, actually. I don't know how long he's been. I've been longer than Ron, though. I've been bearish. Maybe not. I don't know. I haven't followed him for that long. Are we about to enter a true real estate downturn in Canada? Likely, unless government steps in big time, which wouldn't surprise anyone. The signs are here. Sales are falling drastically in Ontario, BC, trading sideways at best. Alberta showing signs it hit its peak. And he goes on, Quebec steady, but really rental driven. Why is the air coming out of the real estate balloon? Mortgage rates are all down from last year. Shouldn't real estate be headed up? Theoretically, yes, but too many factors headed the opposite way. And the 416 Precon condo disaster. It's big. Anyway, he goes on. And it brings me actually to a point that I was going to make. When people say, like, we've already had our downturn, and people in Ontario, I think, usually say this, but not in BC. They, I think, hit a new peak in certain areas last year. I know Alberta did, Montreal, Quebec did. So you have all these places that are still making new highs as of last year. So to say that we've had a real estate crash already just because Ontario took a big dip is not true. So most of the country, again, not by population wise, but by location. Same with out east. Almost all places out east reach new highs in 2024. So we have all these places that reached their peaks. And a lot of people are claiming we already had a crash in 2022 when we didn't. So yeah, keep an eye on that. As collectively as a country, when you factor in Ontario, yes, but if you took Ontario out, we're actually still making new highs as of last year. So it'd be interesting to see going forward. And I know what's going to happen with unemployment and the rest of it. But yeah, it's that post right there just reminded me that I wanted to bring up that point. All these places making new highs, and yeah, what crash? We haven't had a crash yet. It's still coming. Here's another one from Shazzy. Not just in Ontario, in the United States, landlords are slashing rents too. In Nashville, 2-bed apartments listed at $1,900 per month now come with 2 months free, dropping effective rent to $650 per month. New buildings sit at 1/3 empty, prices down. And yeah, there's a quick video. Maybe I'll play it here, actually, see what this guy has to say.
These landlords continue to cut the rent across the U.S. housing market this year. I'm here in Nashville right now. These apartments are going $1,900 a month for a 2-bedroom. And on top of that, the landlord is giving 2 months free rent, which reduces your rent to around $650 a month. We're seeing a big reversal occur from the pandemic. Back then, the rents went way up. Now they're starting to come down. In Nashville, rents are down by about 9% over the last 2.5 years. And you just have lots of properties like this, which were newly built, where a third of the units are sitting empty. Some other markets where rents are dropping include Austin, Tampa, Dallas, Charlotte, Phoenix, and even Las Vegas. Rents are dropping as well. However, they're still higher than they were before the pandemic. Here in Nashville, the typical apartment rent is now $1,400 a month. That's about 20% higher than the $1,150 it was pre-pandemic. However, things are getting cheaper, which is good news for you as a renter out there.
So that's still astronomically high, if you ask me. $1,900 US a month for a 2-bedroom apartment, wherever he was in Nashville. I can't remember where he said, but anyway, I think his calculation is a little bit off there. $650 per month. It drops it to maybe what do you have, a 6-month lease or something? But yeah, that was a little bit off. But anyway, it seems prices are going down in the US too. Here's an interesting one, kind of sums up the Canadian employment market, by the way, with 25% of our work in some sort of public service. The CMHC employs about 2,300 staff, half of which earn $100,000 plus a year. 2,300 people. These guys don't actually build homes either. They have a lot of programs and incentives that they deal with, and the Housing Accelerator Fund, that's just a waste of money in my opinion. But yeah, 2,300 staff. They don't actually build homes, and yeah, over half of them make $100,000 plus a year. And this is why you'll see the public service growing, because they do pay well in these public service jobs. But again, it's going to come time when they're going to have to cut them too at some point in the future. This was an interesting post here, and yeah, I remember this from when I started real estate. There was a lot of talk about vendor takebacks after 2008, and in the 90s, it was a really huge thing. When you can't sell your property and no one can get financing, you have to do these vendor takebacks, or the seller holds a mortgage. They call it holding paper. A record number of properties are listed with seller financing or vendor take-back mortgage, VTBs. Sellers are getting creative in 2025. I'm doing a full presentation on this type of financing at our upcoming capital-focused real estate event. So yeah, it's just like it's just a mortgage that the seller can hold if they're in a position to hold it, and you could still get a first mortgage. Maybe they're on the second, maybe they're the first mortgage. I'd want to be the first mortgage if I was the owner of the house. But yeah, it's just a creative solution. So if you can't get approved with the bank, give me a good down payment, big chunk of money, and I'll sell you my house at some sort of competitive interest rate, and you can pay me the mortgage instead. Another one from Daniel Foch. U.S. delistings surge as housing market teeters towards correction. I'm not going to get into the article, but yeah, they're just delisting. They can't sell them. They have to delist, relist, whatever they have to do, take them off the market, rent them, etc. This one's pretty crazy. I don't know if you've read about this. An investor bought two $2.5 million houses, condos, I don't know what they are there, in Oakville, but may not secure a mortgage, defaulting on his purchases. Remember when housing pundits argued that investors buying up our homes was a great way to build supply? Speculation is the problem, not the solution. I've said this from day one. John Pasalis there. Yeah, it is. It's house prices are high all because of speculation. It was all the problem. We never really had a housing shortage. Sure, supply might have been a little constricted when the demand went up, but the speculation was what really put it over the edge and made things and put us where we are today. This is why, because of speculation. All right, lastly here, I've talked about this on my channel, I don't know, a year or so ago, housing starts and recessions. So yeah, when housing starts start to drop, they correlate with recessions here. And yeah, you can look there. Look at all the times the housing starts start to go down, and the recessions are the gray bars. The housing starts go down, recessions happen. So look at the last one there in the middle, 2008, 2007. Housing starts drop just because it's just nobody's buying the homes. Speculation's ended, and now the chickens are coming home to roost. All right, so that's it for this week. Yeah, the tariffs, they're just a result or a byproduct of our overall poor economy and over-leveraged economy. People, they spent too much money. The government borrowed too much money. Inflation created this big mess we're in. Government spending and of course, interest rates and all the rest of that. But this is just another byproduct, and this is why this is happening. Governments need to make the money, need to collect the taxes, need to correct the overspending situation. And yeah, we're left in a tariff war and whatever else. There'll be something else down the road too, some other financial emergency we have to deal with. Anyway, let me know in the comments, as always, what you think, and I'll see you next week.